These are the boats that were supposed to secure the marine industry's future, but instead became its biggest problem. 4 million boats sold during the pandemic created a sales boom not seen since 2007, with first-time buyers flooding into the market at levels the industry hadn't witnessed in over a decade, and now those boats are coming back onto a market with no room for them, no buyers who can afford them, and no clear path forward. What turned record sales into a dealer crisis and a manufacturing meltdown, and what does this mean for the millions of boats still sitting unsold? Stick around, because this correction is far from over. The marine industry just experienced something it hadn't seen in over a decade, a sustained buying surge so powerful that manufacturers couldn't keep up with demand. Waitlists stretched for months while dealers sold boats before they even arrived, and prices climbed to levels that would have been unthinkable just a year earlier. Americans purchased approximately 4 million boats between 2020 and 2022, combining new and used sales, which represents the strongest three-year period the industry had seen since before the 2008 financial crisis. Every single one of those boats would eventually come back to market, and when they did, there would be nowhere for them to go. The marine industry today faces a correction unlike anything most current dealers have experienced. 8 months is how long new boats now sit unsold on average. Used inventory floods the market faster than it can be absorbed. Major manufacturers are laying off thousands of workers and closing facilities, and multi-location dealerships that survived the 2008 crash are filing bankruptcy. This isn't a minor slowdown or seasonal dip, it's a market adjustment forcing the entire industry to confront what happens when artificial demand disappears. The pandemic created nearly perfect conditions for boat buying. People stuck at home with nowhere to go suddenly saw boat ownership as freedom, outdoor recreation, and a way to safely spend time with family. Stimulus checks landed in bank accounts, historic low interest rates made financing cheap, and stock markets hit record highs while remote work freed up weekends. For hundreds of thousands of Americans, buying a boat shifted from impossible to irresistible almost overnight. Manufacturers ramped production to maximum capacity in response. Factories added shifts, supply chains were pushed to their absolute limits, and every boat that left the factory already had a buyer waiting. Demand still exceeded supply even at full production, which meant prices rose dramatically. 44% is how much new outboard boat prices increased from 2019 to 2022, according to NMMA data, but that number doesn't tell the complete story. Boats routinely sold 10 to 25% below MSRP before the pandemic as dealers competed for sales with discounts, rebates, and incentives, but during the boom, those discounts vanished and buyers paid full sticker price or sometimes more. A boat with an $80,000 MSRP that previously sold for $60,000 was now selling for $85,000, which is a 42% increase in what buyers actually paid, even if technically it's only 6% above official pricing. Pre-owned boats followed the same trajectory, with average prices climbing 28% during the same period. The entire market shifted from buyer-friendly discounting to seller-controlled premium pricing in a matter of months, and the industry celebrated with trade publications running headlines about unprecedented growth and permanent lifestyle shifts. Manufacturers expanded facilities and hired thousands while dealer networks grew and marine lending exploded, everything pointing to a lasting expansion of the boating market that would outlive the pandemic. None of that happened. The buyer demographics told the real story if anyone had been willing to look clearly at the data. The pandemic surge brought approximately 835,000 first-time buyers into the market across 2020 and 2021, the highest level of new entrants since 2007. First-time buyers represented 31 to 34% of total purchases, the largest proportion the industry had seen in over a decade, with average buyer age dropping from 58 to 46, and women entering the market at 1.5 times historical rates. These weren't experienced boaters upgrading from older models. These were people who had never owned a boat, had minimal understanding of ownership costs, and made emotional purchases during a unique moment in history that would never repeat, which meant trouble was coming. Late 2022 brought the first signs that reality was returning. Boat shows that had overflow crowds. The previous year saw lighter traffic. Dealers reported sales cycles stretching from days to weeks and then months, and new inventory that used to move immediately was sitting on lots. The used boat market began flooding, with barely used pandemic purchases being dumped by owners who realized what they'd committed to, and that's when the cycle started feeding itself. Storage runs hundreds to thousands per year depending on location. Maintenance is constant, insurance costs climb annually, and fuel isn't cheap, while winterization in colder climates costs money, along with registration, cleaning, repairs, and upgrades. Every trip on the water has a price tag, and when you finance a $40,000 boat at 7% interest over 15 years, you're not just making a $400 monthly payment but committing to thousands in annual expenses for an asset that depreciates from the moment you take delivery. 800,000 first-time buyers didn't fully understand this when they signed the papers. The pattern became clear quickly as pandemic buyers used their boats heavily the first summer, less frequently the second summer, and occasionally by the third summer before the financial reality became impossible to ignore. They're making payments on something sitting in storage that costs more to maintain than they use, the excitement wore off while the bills didn't, and that's when they tried to sell. The experienced boaters who would normally be in the market for used boats already bought new during the pandemic. First-time buyers who might have considered a starter package are either tapped out financially or scared off by watching their neighbors struggle, and the knowledgeable buyers who understand the market are waiting because they know prices are falling and will continue falling as inventory builds. This created a self-reinforcing cycle that nobody could stop. Owners who need to sell can't find buyers at prices that cover their loans, so they drop prices, which pushes market values lower across segments and puts other owners underwater on their financing. More people are forced to sell, which floods the market further and drives prices down more, feeding itself with no clear bottom in sight. Dealerships are trapped in the worst possible position with lots full of new inventory ordered 18 months ago based on boom-era projections. That inventory sits on dealer floor plans, which are credit lines backed by the value of the boats, and every month that boat remains unsold, the dealer pays interest. 90 days is when manufacturers often stop subsidizing floor plan costs, meaning dealers eat the full interest expense, and after 6 months that boat becomes a serious liability, while after a year it's a financial disaster. 243 days is how long new boats now spend on market according to industry data. That's 53 days longer than the previous year. 1-year-old used boats take 75 additional days to sell compared to 2023, and dealers entered 2024 carrying excess 2023 model year inventory just as new 2024 units arrived. The inventory crunch is real and getting worse, but dealers can't simply slash prices to move units because they have minimum pricing agreements with manufacturers. Drop below certain thresholds and they violate dealer contracts. Discount too aggressively and they anger manufacturers trying to protect brand values and avoid devaluing the entire product line, which leaves them stuck holding inventory they can't sell at required prices but can't discount enough to actually clear. Trade-ins are crushing them from another direction. A 2021 boat with 50 hours should be an easy sale, but when thousands of identical boats are listed online by desperate sellers willing to take losses, why would anyone pay dealer retail when they can wait for better deals? Used inventory that would have turned quickly 3 years ago now sits for months, and the result is dealers carrying double inventory loads with new boats ordered during the boom and used boats taken in trade that won't move. Floor plan costs are strangling cash flow. Every month makes it worse because more pandemic-era boats hit the market, driving values down further, and some dealers are already gone as a result. Tommy's Boats operated 15 locations across 8 states for 43 years before filing Chapter 11 bankruptcy in May 2024, owing between $100 and $500 million. Ed Watkins Marine in North Carolina closed while other multi-location operations are consolidating, shedding locations or selling out entirely, and the dealers surviving are those with deep enough reserves to weather years of losses while the market rebalances. Most don't have those reserves, which means more closures are coming. Manufacturers face their own crisis after expanding production capacity, hiring workers, and increasing output to meet pandemic demand, only to watch dealer orders collapse. Nobody wants new inventory when they can't move what they already have, and that's created a production nightmare. 1,700 workers were laid off at Mercury Marine in 2024. Brunswick Corporation, the largest marine manufacturer, cut 300 permanent positions and announced facility closures in Mexico and Florida scheduled for September 2025, while BRP laid off nearly 300 workers at their Wisconsin plant. Malibu Boats posted a $67.8 million net loss in the third quarter of 2024, and production has been cut across the industry even though manufacturers can't simply stop building boats. Supply chain commitments, vendor contracts, and facility costs don't disappear when demand drops. Manufacturers need to maintain some production level just to keep operations viable, which means they keep building even though dealers don't want inventory and the overhang continues growing. The ripple effects spread throughout the ecosystem in ways that amplify the crisis. Marina slip rentals are dropping as owners exit the market, service centers see declining work as owners defer maintenance, and marine financing companies deal with rising defaults while insurance rates climb and parts suppliers see order volume fall. The entire industry built around recreational boating is contracting simultaneously, creating a downward spiral that feeds on itself. Buyers see opportunity in this crisis. Boats that sold for premium prices in 2021 are now listed at discounts, with some segments like larger boats over 40 feet and certain categories like wake boats and pontoons seeing the steepest drops. Dealers are offering incentives and financing deals unimaginable during the boom, while motivated private sellers are accepting offers well below their purchase prices, just to escape monthly payments, and that's creating real value for cash buyers. Standard boat depreciation runs 10 to 20% in year 1 and reaches 20 to 40% cumulative by year 5. Boats purchased in 2020 and 2021 are now 3 to 5 years old, placing them naturally in this depreciation range, but combine normal depreciation with the 10 to 20% pandemic purchase premium, and some owners are facing 30 to 50% total value losses from what they paid. Premium brands show better value retention, but mass-market boats purchased at peak prices are taking the hardest hits. Most potential buyers are waiting anyway. They see prices falling and assume they'll fall further, they see inventory building and expect better deals ahead, and they watch desperate sellers knowing patience pays off. Waiting means inventory keeps accumulating, which means prices keep dropping, which means buyers keep waiting in a cycle nobody can break. Where does this stabilize is the question everyone's asking. At what price point does demand return and absorb the inventory overhang? And nobody knows with certainty because the marine industry has experienced downturns before, but this one is different. The 2008 to 2009 financial crisis was measurably worse, with sales dropping 20% in a single year and taking a decade to recover. New boat sales are down 9 to 12% in 2024, with specific segments like pontoons down 19.5% and wake sport boats down 14%, which is painful but not unprecedented. What makes it different is the cause, because the 2008 crisis was driven by a broad economic collapse affecting all discretionary spending, while this correction is specific to the marine industry and driven by its own unique dynamics. The broader economy remains relatively stable with solid employment, but the boat market, specifically, is adjusting after artificial pandemic demand created conditions that couldn't last. 4 million boats sold during the pandemic fundamentally altered market structure in ways that will take years to resolve. Boats entered and exited the used market at predictable, manageable rates before the boom, but now there's a massive cohort of similar boats all purchased within a compressed time frame, all depreciating simultaneously, and all competing for a limited buyer pool. This isn't a short-term problem. These boats will affect market dynamics for years and possibly a decade, because even if demand recovered tomorrow, it would take years to absorb current inventory levels, and demand isn't recovering but declining as pandemic buyers exit and potential new buyers are deterred by the carnage they're witnessing. Some boats are being scrapped, though not many. Boats needing expensive repairs or neglected beyond economic viability are being parted out or sent to salvage, and while it seems wasteful to scrap a boat that cost $50,000 new just 3 years ago, when repair and sales costs exceed market value, scrapping becomes the rational choice. Export markets are absorbing others as boats head to international markets with different economic conditions and less inventory surplus. Central America, the Caribbean, and parts of Europe are taking some overflow, but export markets are limited and can only handle a fraction of excess supply, which leaves the vast majority of boats simply sitting. Storage yards hold them, dealer lots display them, driveways store them, and marinas dock them, all of them waiting, depreciating, and costing money. 4 million boats that represented freedom during the pandemic are now financial burdens for owners who can't afford them but can't sell them either, and that's the crisis in its simplest form. The marine industry faces a defining moment. The boom masked underlying weaknesses that are now fully exposed, including over-reliance on first-time buyers who don't understand true ownership costs, dealer networks with insufficient reserves for down cycles, and manufacturers with inflexible production systems. A financing structure that encourages over-leveraging made everything worse, and growth covered these problems until growth disappeared, leaving every weakness visible. The industry will survive because it always does. Fewer dealers will remain, more consolidation will occur, and different buyer targeting will emerge as the industry probably returns to focusing on experienced buyers who understand costs rather than chasing first-time buyers with lake-life dreams. The days of 4 million boats in 3 years are likely over, replaced by a more sustainable but smaller market that serves people who actually want to own boats long-term. What we're witnessing is the unwinding of the strongest boat buying period in over a decade, and the adjustment process is painful, messy, and far from complete. These millions of boats purchased during the pandemic are still out there depreciating and waiting for a market that may take years to stabilize, which creates opportunity for buyers with cash and patience while forcing sellers and dealers into survival mode. For the industry, this is a correction that will reshape recreational boating for the next generation, fundamentally changing how boats are sold, financed, and marketed. 4 million boats are out there. They're not going anywhere anytime soon.